Hello, everybody, and welcome to Commodity Culture, where we break down the commodity space for both new and experienced investors. My name is Jesse Day, and before we get started, standard disclaimer: nothing here is investing advice. Do your own due diligence. And today's guest is the author of Paydirt, Mining for Profits with Gold and Silver, and the founder of thegoldadvisor.com, Jeff Clark. Welcome back to the show.
Great, Jesse. Thanks for having me on again. And I enjoyed being on the panel with you at PDAC there, by the way.
Yeah, the VRIC, I think you're referring to in
Oh, is it
January. It
there?
was
Not P. Okay.
Yeah, it was me,
So
you, and
many
Paul Harris.
conferences going on right now.
Yeah, exactly.
It's conference
Exactly.
season, so I'm kind of anxious for it to end so we can get on to mine tour site visits, that season. So we'll see.
Yeah. Well, I definitely want to dive into mining and how you evaluate mining companies. But before we go there, I want to start with your current outlook for gold because we saw a big jump in the price recently. It hovered near all-time highs. It's come down a bit since then. But with the bank failures happening in the US, I think a lot of people are losing confidence in the traditional financial system. I have to admit, I just added an ounce of gold to my stack the other day, and while I'm always happy to add some more sound money, I was kind of psychologically spurred on by everything going on. I was like, wait a minute, I bank in Canada, but I just feel much more comfortable not having too much in the bank. I like to take some out, put it in sound money.
Yeah,
Um,
definitely.
yeah, so my question is, how do you see things playing out for gold? Do you see more people developing the attitude that, hey, maybe we can't trust the powers that be in the financial system as much as we thought we could, and perhaps turn to the precious metals as a potential safe haven for their wealth?
Yeah, so I had a immediate family member, I won't say who it was, but someone who really wasn't invested in gold and silver at all, but knows what I do. And yesterday, they called me to ask how they could buy gold. And this was a direct result of everything that's happening with the banking failures, what the Fed is doing, etc. And the motivation on this person was not to make money, to make a profit. The motivation was they kept saying to me, okay, now this would be safe, right? If I own physical gold, safer than, being in the banking system, having cash, savings, stocks, especially. So, no, that's anecdotal, but I think we can see by demand, by interest, by even headlines that more and more people are increasingly interested in having exposure to gold, to real money, in light of what's happening. And, Jesse, this is really just a small taste of what could happen. Now, this, does this blow up further? Does it kind of calm down? Who knows right now? But the bottom line is, I think that things like this are going to increase, and there will be an event at some point in the future, probably related to the monetary system, that really causes all of us to wish we owned more gold. When the SVP news first came out, I bought 3 more ounces that day. So now I did also buy mining stocks because we'll talk about that. But I think, I wanted more exposure, even though I have a very meaningful amount relative to my assets. So I think we'll see more and more of that. Um, the one thing about gold that I would say, I hate giving predictions. I've been wrong about that. Everybody's been wrong about it sooner or later. But the one thing I would point out is that history is very clear on this. There have been 11 cycles in the gold price since the 1970s. 11 very distinct ups, very distinct downs. If you measure the percentage gain and the percentage it gives back, then the next percentage gain, the next percentage, there's been 11 of those. The last one was the COVID bounce. If you remember, things crashed in March of that year, 2020. And by September, gold and silver had risen dramatically. Silver, as usual, outperforming. That was the last spike, if you will, the last cycle in gold and silver. Since then, we've been in a down cycle. So guess what comes next? We don't know the timing, how big it'll be, etc. But we do know that there have been distinct cycles. The next was up. Hey, maybe the next one's going to start now because of what the Fed is doing. Who knows? But I feel very confident just knowing strictly on price history that there's going to be another upcycle. But I feel even more confident about owning gold because of the state of the monetary system that it is not sustainable. That's the bottom line for me.
You mentioned silver outperforming there, and I wanted to shift to silver for a moment and get your outlook there because it is a metal that tends to outperform gold in precious metals bull markets historically, and so it can provide torque on the price of gold if the market is headed in that direction. Do you see the same trend occurring this time around?
Yes. Now there are analysts out there, some very good analysts I know that are saying, look, silver is really turning more into an industrial metal now. And so we shouldn't expect it to outperform gold like it's done in the past. Well, look at it this way. The shift to silver being more of an industrial metal is like a giant barge in a port trying to negotiate a 3-point turnaround. It's slow and going to take time, right? Whereas the silver price in the meantime is like a speedboat whipping around the waves around it. So um, even during the COVID bounce there, gold rose 40%, I believe it was. Silver rose 140%. So there's going to be these spikes. We've seen on days when there's been real issues with the SVP, with the Fed announcement, silver outperformed gold. Now, it is true. Silver is becoming more of an industrial metal. If you look at the industrial use each year, it is rising over time. But again, that's a slow trend. It probably will come to fruition. But in the meantime, especially until the monetary system changes or blows up or whatever it's going to do, silver is going to have its periods where, especially during run-ups, where it outperforms gold. History is very clear on this. Even the history of last week is very clear on this. So I still expect that, yes.
I want to get your thoughts on Gold 24/7. Shout out to Cam Curry. He did an interview with Jay Martin recently where he brought this up. I wasn't even aware of it, but the World Gold Council has this initiative to digitize the gold market through allocated gold in storage and blockchain technology, so to tokenize it. Do you see this as a positive advancement? Are you of the camp that if you don't hold it, you don't own it? Do you think it could allow more people to participate in the gold market that otherwise wouldn't? What are your thoughts there?
Well, yes to all the above, Jesse. You kind of answered the question there. There's both good and bad with this. The positive is that, hey, it's going to bring more exposure to gold. Young people like you are going to be more attracted to owning gold in a digital form, online, on their cell phone, whatever. As long as it's backed 100% by gold, hey, that's a great thing. I think the exposure will be good. I think the demand will uh, that the things like that will make demand higher during periods of price spikes and headlines and things like that. The negative, of course, is that you're automatically introducing counterparty risk. And so you have to acknowledge that. So if someone likes that, what I would do is make sure you own some physical gold first, that's in your hand, that nobody can take away from you, that, well, as long as you keep it safe. But has no counterparty risk. That's my point. If you can do that first and then use that other kind of service, I think that would be great. So I do believe in diversifications. That's one way to actually maybe diversify your gold holdings. But again, I would start with physical first because that is the safest form. You can hold gold. You have zero counterparty risk.
So you have an excellent newsletter service, thegoldadvisor.com. You analyze precious metals mining companies. You also go into great detail in that endeavor in your book, Paydirt. So I wonder if you could lay out some of the main factors you take into account before making an investment decision on a gold or silver mining stock.
That's what kind of led me, Jesse, to write the book in the first place. Is I wasn't writing for a mining newsletter at the time, so I just thought, in this was 2019. You know what? I'm just going to release all my picks to the public, and if anybody's interested, they can buy them. So I started to do that, and the first question that came up immediately and kept coming up was, well, Jeff, how do you pick that stock? Why did you pick that one? How did you come to the conclusion that might be a good one? Why did you exclude that one, etc.? So the idea of writing a book came up, and I was too busy at the time. But then when COVID hit, I had no choice, right? I lost my excuse of being too busy. We couldn't go anywhere or do anything. So basically, I went in the office and turned on the nightlight and started to outline the book. And it was about a 2.5 year endeavor, off and on, but it was a lot of work. Uh, I had an editor. We kind of tore up the first draft and rebuilt it into something that was a lot more fun to read. It is actually very entertaining and easy to read. Um, and then we also decided we would interview people in the industry. So there's 16 experts in the book. And also, there's literally hundreds of quotes from all these guys' names you would know that are in the book as well. It's quite a resource, to be honest. I say that humbly, but it's quite a resource I haven't seen elsewhere, of a lot of wisdom that someone could really gain from wanting to pick their own mining stock. So that's how it kind of came about, and why I wrote it. I'm glad I did, even though it was so much work. Uh, it is an online version only. It's a digital book first. We're working with Amazon now. I need a little more time to get that done. Um, as soon as conference season ends, right? But so there will be a physical book coming, but it's a digital online downloadable PDF, if you will, to start with. So yeah, it's why I did to answer those questions. But the easy answer to your question, sorry to go on so long, is it's right on my site. Criteria for a mining stock, and it basically starts with the three legs of the stool. The book obviously goes into a lot more detail, but it's the people, the political jurisdiction, and the property. You're looking at those three things. So that's your starting point. Those three things for me have to be in order right up front before I even go any further.
So when it comes to jurisdiction, how do you ascertain risk when it comes to gold and silver miners? Because, you have more established jurisdictions like uh, Canada, the United States. I don't want to say established, I mean more politically safe, according to most people. But then you can have a lot more ESG sensitivities, a lot more time to get a mine permitted. Where in some of these countries where perhaps it's unstable from a security or from a political situation, you get the mines permitted much faster and there's less ESG concerns. So do you think it's a matter of being diversified geographically so you can kind of mitigate the risk, or do you tend to stick to the more safer, traditionally safer jurisdictions?
No, I believe in diversification, but this is one area where I probably don't, and that is, you really need to focus on not safe jurisdictions. There is nothing that is safe in all the world except gold, maybe. So there's low risk. There's lower risk with a lot of these jurisdictions. Nevada and Quebec are always in the top. They keep trading places in the Fraser survey, and that's a good starting point. Pardon me, just Google Fraser mining survey, and it'll pop up, and you'll find that I don't believe they've updated 2022 yet. So I think the latest version is 2021, but it goes into great detail. And the great thing about it is all those responses are from miners themselves working in that country. So they can be very honest. They're anonymous. So they can be very honest, and it's direct input, as if you called them on the phone. Hey, what's it like down there? And in Brazil or whatever. So that's a good place to start. And obviously you want the higher rating. So I'm tempted by Colombia. There's a couple of companies in Colombia, for example, I'm looking at right now. One I really want to buy. And the only reason I've held back is because it's Colombia. So some of the things I've learned, excuse me, since then have been, actually very positive. So I might end up investing there. But there's so many opportunities, so many good opportunities in Canada, in the US, in Australia. So why would I add political risk? Look, we're investing in miners. It's one of the most riskiest assets on the, investment categories on the planet. We can take advantage of that, that volatility, but the risk is already high. So why add political risk to that, on top of the risk you're already taking? That's my view. And personally, I've lost money before on some investments. One went to actually zero. I mean, maybe $100. I put that example in the book, even though it's embarrassing. So hopefully people can learn from it. And it was all because of political risks, and it blew up. So I've learned from personal experience. I'm just not interested in in countries that have a medium to higher risk profile because you can't move the deposit.
Yeah, I like that. Being conservative from a jurisdictional standpoint, because as you mentioned, mining is already a very risky endeavor to begin with. So why add more risk to the speculation? And as you mentioned, you've also been investing, regularly deploying capital in precious metals miners. I'm wondering if you think there might be a bigger correction in the broader market up ahead that could bring mining stocks down with it. And do you not pay attention to that and just dollar cost average? Do you take that approach? Or do you think it's also important to have cash on the sidelines in times like these to take advantage in case of big corrections?
Yeah, these are good questions and they're important questions. So first with the market correction, um, the short answer is if the stock market, the broad stock market crashes overnight, there's a waterfall decline like like we saw in the COVID crash, for example. Well, everything's going to sell off. It doesn't matter what you own. Even gold, the price of gold sold off, right? It bounced back quicker than a lot of things, but everything sells off. And so I think having that understanding going forward, going into this, that if there's a market crash, maybe there's not. We've already had one last year. But if there is, you got to understand, look, I know that everything I own could take a temporary short-term hit from that. Now, on the other hand, if it's a just a bear market, we go into recession, the recession is announced finally, and we go into that, and there's a bear market, and stocks are flat, whatever. But if gold rises, gold usually rises during recessions. If gold rises, then mining stocks are likely to rise as well, and that's an opportunity you'd want to be a part of it if you're into the sector. So it depends on how it exactly plays out. I don't dollar cost average with mining stocks. I definitely dollar cost average with gold. Actually, I don't dollar cost average. You know what I do, Jesse? Some of my biggest wins as a mining investor, as a gold investor, have been buying during crashes. There you go. There's my secret strategy, right? I look back at my portfolio. My biggest wins are when gold and mining stocks have crashed and I bought. So that's how I view it, because until the monetary system has changed, I feel safe owning gold and therefore gold stocks, no matter what happens to other things like the market in the meantime. So I guess I don't dollar cost average. When there's a big sell off, man, I salivate. I jump in, so that's how I've handled it. Now I think dollar cost averaging with gold and silver is a good strategy. There are firms out there that can do that for you. Goldsilver.com, who I used to work for. Hard Assets Alliance has a neat program. So there are ways to do that. That's how I would do it. But for mining stocks, I probably don't dollar cost average. I probably, pick my points a little bit more specific. And I buy in tranches. That's how I like to view it. So, and I talk about this in the book in extent. It's one of the 5 commandments, how to buy a mining stock, is to buy in tranches, in 2 or 3 or 4, parts or whatever. And of course, you only do that on down days, on weekdays when the price is falling. That's when you want to buy. So that's kind of how I handle mining stocks in particular. I rarely go in all in at once on a mining stock. Now, there are times when I've done that and the stock took off and I never got another tranche, but at least I got in, right? So they're risky, they're volatile. So the best strategy with buying mining stocks, in my opinion, is buying in tranches. And then, real quick, sorry for going on so long. Hope it's okay. You mentioned cash. Um, Here's how to view that. You're always going to need cash. You're always going to need cash, whether it's because there's a big crash and you want to buy mining stocks or gold, whether there's not and there's new opportunities that come up. Here's another thing to keep in mind. As the bull market goes on, there's going to be more and more opportunities that are going to pop up. Now, they're not all going to be good, but there's going to be other opportunities that are very compelling that you may want to take advantage of. If you don't have cash, you can't take advantage of them. Maybe there's something happening in the economy. Maybe there's something happening with you personally. Bottom line, you're always going to need cash, always build cash. And one way to do that is to take profits on big winners. So I do that. A stock doubles or triples or whatever, and I take a profit.
Very sage advice there. I like that, to always have some cash on the sidelines. So I want to shift to central bank digital currencies because these have been coming back into the limelight as of late. Some people are speculating that this whole fiasco with bank failures in the US could even be engineered, that the Fed wants bank failures in the regional sector so they can drive capital into these too big to fail banks that are now fully insured, such as JP Morgan, that the Fed can then more easily control and ultimately use the situation to help ease the adoption of a CBDC. So, what are your thoughts there? And is this potentially one of the reasons to own gold and silver, to kind of avoid this sort of transfer to a CBDC as much as possible?
Right. Some good questions, Jesse. I like this. So the CBDC, how I view it is, um, I don't trust the people. I don't trust the government. So, I mean, I think a lot of your audience may feel the same way. But I've been burned by them. They've been wrong about their forecasts. Ben Bernanke in 2006 saying, the real estate market is stable. Jerome Powell, inflation is transitory a year or two ago or whatever. So, I don't trust them. I don't trust most politicians. So, the people behind this that we may not even know of, by the way, we may not even know who they are. Um, I definitely think they have ulterior motives. I definitely think the government, and at least some in government, want to go this way, and I think they eventually will. Um, so that's my first thing. I don't really trust them, but the point I want to make about that is I think that it's going to take longer than they think, and that some people on Twitter think. This isn't probably going to happen overnight. I know Doug Casey said it's probably going to happen by June. Eh, we'll see. I have nothing but respect for Doug. I've worked for him, so. But I think that we're dealing with the government. It's going to take them a while to put this together. I don't think it'll happen overnight. It'll be wonky at first. It may not work at first. Um, so it probably is going to take a while. But the other thing is, I don't think it's going to necessarily mean the elimination of all cash. I still think they'll have to have an allowance for some cash transactions, even if like a grocery store doesn't allow cash anymore. There still will be cash floating around. One example would be the poor. They don't have credit cards and debit cards and all this kind of thing. They use cash only. Um, so for that reason alone, I think are they going to discriminate against the poor? So I think there will always be some cash. However, given that this trend is coming, it makes me want to own gold and silver even more. That's partially why I bought those 3 ounces a few weeks ago, because of the headlines of CBDCs coming up. And it scared me because I wanted physical gold. I got it delivered. I wanted that. Um, because I think they could control you with the CBDC. In other words, they would know who you are. They would have direct access to your account with a CBDC. So therefore, they could limit your funds or restrict them or cut you off from using them. They could do all those things because of something you do or something you don't do. Maybe your social credit score isn't high enough, right? So um, your climate score isn't high enough. So I don't trust them. I all these things are on the table. They may or may not come to fruition, but I want to own physical gold. I want to be out of the system because it's physical. It's in my hand. The CBDC is nothing but a digital transfer. It's ether. So I don't want to be part of that system 100%. If it's forced upon us, I still want to have the option of physical gold in my hand outside of the banking system, outside of the system, period. So I don't have that counterparty risk too, right?
Yeah, absolutely. And that's why I live in the Balkans because nobody here trusts the government. So at least I can be amongst like-minded people. Also, cash is still really prevalent. A ton of restaurants, coffee shops, they won't accept cards. So it's going to be very difficult to push a CBDC on this region of the world. Um,
That's a good point, Jesse, is having some international diversification. I think people, those in the US and Canada, especially, and Australia, should have some type of form of money, preferably gold, that is outside of your home political jurisdiction. That will give you another layer of protection against a CBDC, because a lot of foreign countries aren't going to necessarily adopt that, like you're saying. So I think international diversification is important.
Yeah, absolutely. And speaking of central control, it seems like we are living in a very centrally planned economy, a centrally planned market, with investors seemingly having to pay attention to Fed policy if they're going to raise, pause, or what has now become mythical pivot. And, as we're speaking today, they raised another 25 basis points. Firstly, how much should your average retail investor really be paying attention to the Fed funds rate? And secondly, how do interest rates affect the price of gold? Is there any connection there?
Yeah, well, unfortunately, we have to pay attention to what the Fed does. I do as an analyst. I'm forced to, but I don't like the fact that they control the market so much. Part of that is because they do have control. Part of it is because the mainstream relies so much on them, watches them so much. They're like a lap dog that's sitting in front of you, waiting to be fed with their tongue out. That's how I view the mainstream, looking at the Fed and waiting for their decision, right? But it does impact things, at least in the short term. So I, unfortunately have to pay attention to them. Now, as a common investor, I don't know if I would give them that much credence. I might watch the news, but it's not something, it's more of a short term thing. It really is. Even if that short term ends up being a year, I don't think it's that important for the average investor to necessarily have to watch what they're going to say, because there's so many other factors that can impact the market as well. It wasn't the Fed that led to gold being flat last year. It was the rising US dollar. And as far as rates impacting gold, yes, they do. It's the real rate. First of all, it's the 10-year minus the CPI, the current CPI. If that's negative, that's a negative real rate for interest rates, and that is positive for gold. Now, they were still negative last year, so a lot of people are saying, "Hey, the rate's negative, the real rate is negative. Why is gold falling and down and weak and all that?" Well, that's because the direction changed. They went very negative, and all of a sudden, the negative rate changed and got less negative. The direction shifted, and that's what led to a lot of investors selling gold. So again, I view that as sort of a short-term thing. Um, the in the bigger picture, you don't own gold because of those things. You own gold because the monetary system is unsustainable in many ways, and that's a complete other discussion. But that's why we own gold, and that's why the Fed's movements are short-term impacts only.
So you mentioned at the top of the show the panel we were both on at the VRIC, and the next one's going to be coming up 2024, January 21st and 22nd at the Vancouver Convention Center. Tickets should be available in a few months. Attending conferences like that gives retail investors the unique opportunity to actually speak with gold and silver mining management face to face and ask questions. So given that situation and perhaps a limited time frame, if they're busy, they can't speak for a long time. What are the most important questions that you would ask? And are there any red flags that could come up in that conversation that would make you second guess the company?
Yeah, another great question. It kind of goes back to the three legs of the stool. You want to make sure the people, the politics, and the property are all in order, and then you can kind of go from there. But one question that's a non-starter for me, if they answer no, is have you invested your own money into the company? Not options or shares or warrants that you were granted as being the CEO or the geologist when you were hired. um, your own money, your own cash from your own bank account, how much have you put into that? And you can have anywhere from 50,000 to millions, right? It's relative though. You know, if a young CEO has put 50 grand in and he has literally no other money, that's a very significant. That's a I cannot let this fail type of scenario. So that's a starting point for me. You want to ask it in a respectful way, hey, if you contributed some of your own money to this company that you're wanting me to buy, so that's one thing. And then the second thing is you can find out what the track record is of the CEO or the geologist, whoever you're talking to, by finding out what other companies they were part of, what they managed or ran or whatever, and go back and look at the stocks of those companies. And did the stocks rise? Well, under their tenure, while they were in charge, or did the stocks crash, fall, go to zero, whatever? So that's one thing you can do, is go back and look at the track record under their tenure of what their prior companies did. So that's another thing that I do, before I probably even talk to them, is find out what their track record is and did they create shareholder value in the past. And by the way, I really love VRIC, that conference in Vancouver, and every year in January. The reason I like it is because it's, PDAC's giant, right? So you can get some things out of that. But the advantage to VRIC is it's not as big, right? And it does focus more on juniors, which is where I play. So I love VRIC. If someone can go, I was actually free this past year, so maybe it'll be free again in 2024. So if someone is interested, that would be a good one to go to, especially if you like juniors. It's smaller, so you can spend a little more time. It's not as crowded. You can talk to the people there. You have more of a chance to talk to people there and speakers as well. So I love it. So I will see you on the panel next year, I assume, right, Jesse?
Yes, yes, I will be there. And before I let you go, I just want to step outside of precious metals for a moment and have you talk about any other metals or commodities that you're currently bullish on. I know you were bullish on uranium last time we spoke. Are you still positive on uranium? And is there any other metals or commodities that you're either watching or deploying capital into at the moment?
Yeah, still bullish on uranium. It's kind of floundered since our last interview, but the supply demand fundamentals there are very strong. What's happening politically? So the green movement. There's three reasons right there why you have to remain positive on uranium. So I'm still long uranium. All the stocks that I don't know if we talked about stocks, but I'm still long all the stocks that I may have held back then. So definitely uranium, and then also copper. I don't have any copper plays or uranium. I don't have any non-gold silver plays on the website yet. I'm kind of waiting until they announce a recession, and I hope these things sell off a little bit more. But I definitely am going to have some copper on there for some of the same reasons that you have uranium. There's a true supply demand issue there that is going to last for years, that is structurally unsound right now. It's not structurally fixable yet. It's going to take years to really turn that around. So I'm going to have some probably copper gold plays that have some gold in them too, but definitely some copper gold plays. There's some I've already targeted that I want to have on the site, so I'm watching that market as well. And then the other one would probably be lithium. I know the price has spiked a lot, but there's a couple companies I really like that are very compelling, that I think would be probably good speculations for investors. Again, kind of waiting for that to cool off a little bit, hoping a recession announcing that would cool these off. But I could be wrong about that. Maybe the bottom is in for some of these things. We'll see. But those are the other three metals that I definitely am looking at.
Awesome. Well, thank you so much for joining us today. So much wisdom shared. We really appreciate it. For those who want to hear more from you, could you tell us about thegoldadvisor.com? And you spoke about the book earlier, so where can people get themselves a copy of Paydirt?
Yeah, everything's on the website, thegoldadvisor.com. It's all free. You do have to create a login credentials to view the portfolio. We want to be able to track how many people are viewing it and tell companies that. It is a sponsorship model, so people need to be aware of that. Basically, they support the site financially instead of subscribers. If we had to charge investors, I don't know, $1,000 a year or something like that. So instead of doing that, I've done that. I've been a part of the newsletter service before. I didn't want to do that anymore. It's a lot of work, and I'd rather just have sponsors and just focus on the companies that I want to focus on. So that's what we have. But it's all free, even when you create a login. The book is there as well. There's a tab for that. The Paydirt book, you'll see lots of information about the book. There's videos that I've recorded. There's even a free sample chapter about the scariest mine I've ever been in. And I will tell you that if you are claustrophobic, be forewarned when you read this. So, but it's kind of fun. It's entertaining. It goes right from there in the book to a phone call from the hospital about the most important person in the world, your mother. And what does that have to do with gold and silver? Well, everything. You'll see why. So it's an entertaining book. It's very readable. Lots of wisdom in it, not just for me. Like I said, there's 16 other people in it, but the login is there. The link is there on the website, and people can check it out and see if it's something that they would find of interest. So it was a lot of fun to write for me. So I hope that comes through to people when they read it. But most of all, I hope people read it and find Paydirt in their portfolios. So.
Great, I love that. Well, thanks again for joining us, and definitely look forward to having you on again to continue the conversation.
Great, Jesse. Thanks for having me. And yes, hopefully I'll see you again before 2024. But if not, I'll be sure to see you then.
Commodity Culture is a series on commodities and natural resources. If you would like to see more, be sure to subscribe and hit the bell notification so you're always up to date with the latest episodes.